Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Today we from Group 2 going to be presenting about currency analysis during the pandemic situation. So for our currency analysis, we are going to presenting about Singaporean dollar. So next. So today, the members of the team that we're going to be presenting is me, Muhammad Ibn Alias. And the second is Zainurul Ashikin binti Zaidon. And the third, we have Muhammad Daniel bin Muhammad Jalani. And then fourth, we have Sofia Nur Farisha binti Hashim. And last but not least, Haris Iskandar bin Mat Aminuddin. So next. So let's see about Singapore brief history. So there are two eras, which is foundation of Singapore and modern Singapore. So the first one is for foundation of Singapore is Sir Stamford Raffles founded Singapore in 1891. Um, Sir Stamford Raffles actually were a clerk to British at that time, and then 2 years after that, he was appointed to be a governor of island Sumatra. So, and then the next one we have Singapore Island was put together with two states, which is Penang and Malacca, under the command of the British Empire in 1924. And then also when British were commanding the Singapore, there are also famous buildings that have been built and became history of Singapore, which is Victoria Theatre and Concert Hall that were built in 1862. And then moving on to the next one, we have modern Singapore. It started with in 1942. The country was attacked by the Japanese. Mind the person who are watching this. The country at that time was Malaysia. Singapore was in Malaysia at that time. It was attacked by Japanese and then taken back British in the year of 1945. And then moving on to the next one, we have Singapore people begin to form party called a People's Action Party, where the party competes for the titles and the seats. As you know, this happens when Singapore were dissolved from Malaysia and in 1945, and then last but not least, Singapore was led by Lee Kuan Yew as the first prime minister for Singapore, and then resigned and was replaced by Goh Chok Tong in 1990. Next. So the second thing that I'm going to talk about is the currency of Singapore dollar background. So Singaporean dollar starts with using dollar of the street as the main currencies and money in the states of in 1939. In the year of 1953, it was taken over and replaced by Malaysian dollar and Borneo. And then the next one, starting from the creation of their own money, it was fixed at the pound sterling with an exchange rate of 60 Singapore dollar equals to 7 Great Britain pound. And last but not least, we have the Monetary Council of Singapore was dissolved and it's now taken over by the Monetary Authority of Singapore in 2002. That's all from me. I'm going to be passing to Haris for the next point.
Thank you, Anik. So moving on to the next part of the presentation, we have the economic overview of Singapore. Next slide. In terms of the economic growth, Singapore is suffering a decline of 4.1% in 2020 due to the pandemic. However, the economy made a strong recovery in the following year, expanding by 7.6%. The trade surplus was able to grow 29.8% of GDP in 2021, owing to a decrease of 6.7% in the value of exports and also a contraction of 7.7% in the value of imports. Meanwhile, the finance and insurance sector grew by 0.4% year on year, down from 2.4% in the previous quarter. The sector's poor performance was mostly the result of a contraction in the banking segment due to a drop in net fees and also commission incomes. While looking ahead to 2023, GDP growth rates are predicted to decline further from 2022 levels in the majority of the world's most important economies, with substantial slowdowns projected in both United States and also Eurozone. As the conflict in Ukraine carries on into 2023, it is projected that the global supply chain will continue to experience disruptions. Next slide. Singapore has a comparative advantage in producing high value added goods due to the large amount of highly skilled labor. Factors such as the significant focus placed on education and training, the level of expertise and information held by workers in Singapore has significantly improved over the course of the past several decades. These high-end goods include high-end electronics such as electronic valves and high-end chemicals such as refined petroleum products, and to a lesser extent, engineering products such as civil engineering equipment, parts, and pharmaceuticals. Next slide. In addition to exporting high value added commodities, Singapore is also a leader in the field of high value added service exports, particularly in the areas of finance, education, and healthcare. It exports low value added commodities like semiconductors and disk drives. Since Singapore is almost completely devoid of factor endowments, it is at a competitive disadvantage when it comes to the extraction of natural resources like crude petroleum. Moreover, it possesses a relatively low amount of fertile land, which places it at a competitive disadvantage in the agricultural sector. As a result, Singapore is a net importer of crude petroleum as well as the agricultural goods. Because there is only a limited supply of low skilled labor in Singapore, the country is at competitive disadvantage when it comes to the production of items with minimal value added, such as textiles and furniture. Therefore, Singapore must import these products. To simplify, key imports of Singapore include machinery, transportation equipment, and crude oil. Meanwhile, key exports include machinery and refined petroleum products. Based on the latest trends in October 2022, Singapore exported SGD 44 billion and also imported Singapore dollar 40.7 billion, resulting in a trade surplus of Singapore dollar 3.32 billion. Next slide. Okay, these are Singapore's trading partners, which the first one we have Malaysia, then China, the United States of America, Indonesia, and also Japan. For the next part, I'm sure Ashikin has the words to say, so I'm going to pass it to her.
All right, thank you, Haris. Okay, now let's move on to the types of foreign investment in Singapore, which is foreign direct investment. There are four types of it, which is first is financial services and banking. The types of banking activities that local and foreign financial institutions are controlled by the conditions of the respective licenses and Singapore dollars, for example, are not authorized to be utilized while running retail banking facilities for Singapore licensed wholesale bank. Okay, next is media. In Singapore, shares are restricted to newspaper companies that can only be public. Before becoming a substantial stakeholder of a newspaper company or receiving finances from overseas sources, a person must first obtain prior regulatory approval. Okay, third is legal. All Singapore law companies must go through a licensing procedure which regulates the range of Singapore law related services they can offer. A foreign law firm may establish a foreign law practice in Singapore and provide legal services in foreign and international law as a qualifying foreign law practice in permitted areas of legal practice or enter into a joint law venture or foreign law alliance with a Singapore law practice. Okay, last is land ownerships and real estate. Every foreign ownership that buys commercial or industrial real estate is not subject to restrictions in general. However, foreign investors making purchases are subject to special restrictions on all forms of residential property and some land. Okay, next slide. Okay, this is the actual regulations concerning financial operations in Singapore. Okay, first is they're supporting individuals through COVID-19. MAS has offered two measures to individuals, which is firstly, MAS assist consumer in three ways, which is relieving cash flow through deferred and extend payback, deferred premium and flexible installment plans, debt reductions, and access to basic banking services. Secondly, by helping individuals transit to full loan repayments. Okay, second is supporting businesses through COVID-19. MAS has collaborated with Singaporean financial institutions to provide choices for SMEs in need of lowering their short-term loan repayment commitments and remaining insured despite financial challenges. For support for listed insurer, MAS and other institutions have implemented numerous measures, including guidance and a checklist for holding general meetings and extensions of the time to host AGMs and increased share issuance limit for member issuers and the possibility to electronically distribute offered materials. Okay, next must also have supported REITs where they implemented new measure to give Singapore Exchange listed real estate investment trust greater flexibility in managing cash flow and raising funds. Okay, third is ensuring monetary and financially stability. Must has set a policy band appreciation rate of 0% per year and has also maintained sufficient Singapore dollar liquidity to the banking sector through its daily money market operations, allowing banks to continue to play their role in providing loans to Singaporeans and businesses. Okay, next is enabling financial institutions to manage pandemic challenges. MAS will make an adjustment towards capital and liquidity requirements for banks, determine the accounting loan loss allowance, postpone the implementations of regulatory reform, report timelines will be extended, and industry project will be postponed, interrupt on-site inspections and supervisory visit, and ensure sound risk management. Okay, second last is enabling financial institutions to build long-term capabilities. Must launch a Singapore dollar 125 million assistance package to sustain and increase capabilities in the financial services and fintech businesses. After the threat of COVID-19 has passed and economic activity has returned to normal, the support package will help to prepare financial institutions and fintech sectors for greater growth. Last is ensuring safe management and operational resilience of the financial sector. MAS has also prioritized monitoring, supervisory, and enforcement operations on financial institutions' pandemic response, as well as operations and cyber resilience. MAS aggressively encourages customers to conduct their transactions using online channels such as internet banking or business or customer service portal. Next slide. Okay, this is the trend in these regulations. Okay, in April 2019 of the monetary policy statement must maintain the rate of appreciations of the Singapore dollar nominal effective exchange rate policy band, and there was also no change to the width or level at which the policy was centered. Okay, during the preceding 6 months, the Singapore dollar nominal effective exchange rate climbed into the upper half of the policy range, reflecting shift into global risk sentiment and capital inflows into Singapore. The 3 months Singapore dollar CIBOR rose from 1.9% at the end of April 2019 to 2% at the end of June before dipping back to 1.9% in August and remaining there as of the end of September. Okay, the Singapore economy's growth has decreased in the first 3 quarters of the year. It is predicted to pick up somewhat in 2020, although this forecast is subject to significant external uncertainties. Core inflation has been lower than expected in recent months and is expected to continue low in the next year. Okay, next. Okay, for the currency risk, due to the COVID-19 pandemic, Singapore's GDP contracted by 3.8% in the fourth quarter of 2020 compared to the previous same period, a little improvement from the 5.6% decline in the third quarter. Singapore Central Bank tightened monetary policy for the first time in 3 years to contain inflation after the country economy was impacted by COVID-19. MAS adopted the measure as economic growth reached 6.5% in the third quarter, which was initially intended to accelerate economic recovery from the worst impact of the pandemic-induced slump. Okay, that's all from me. I will pass to Daniel.
Thank you, Ashikin. So let's have a look on Singapore currency performance and issue. In 1967, Singapore became the first country in the world to mint its own coins and banknotes, with a variety of denomination available. In the beginning, the Singapore dollar was pegged to the value of the British pound. After that, it was briefly pegged to the value of the United States dollar. Finally, in the middle of 1970s, the Singapore dollar was pegged to trade weighted basket of currencies to keep inflation under control and to maximize the value of Singapore's exports. The Monetary Authority of Singapore (MAS) began allowing the Singapore dollar to float freely within a band of foreign currency prices in 1985. This band is kept under strict supervision by MAS. This is about the currency of Singapore. According to the Singapore Business Review, Fitch stated that the value of the Singapore dollar SGD dropped to $1.35 in comparison to US dollar USD in the year 2021, and it continued to depreciate even more to reach $1.36 in the year 2022. The SGD has weakened in the line with the most other Asian currencies after the Fed hawkish surprise on June 16, said Fitch. It was traded in a weaker range between $1.35 per USD and $1.38 per USD for the remainder of 2021 and likely in 2022 as well, Fitch added. This is because of the risk of mentality that has been prompted by the recurrence of COVID-19 infections across Asia, especially in the significant economies of Indonesia, Malaysia, and Thailand. On July 8, the Singapore dollar fell below the crucial support level of 1.35 US dollar and has continued to decline since then. The last time Singapore broke beyond this threshold was in July of 2018 during the early stage of trade war between the United States and China. Singapore exchange rate volatility has always been the lowest, reflecting the country's strong economic fundamentals. Based on the findings from the wavelet power spectrum (WPS) as shown on the slide, it implies that Singapore experienced a high degree of exchange rate volatility throughout the pandemic period. The volatility of currency can be attributed to part to inflation as one of the variables. Inflation in a particular nation is one of the most common factors that leads to a shift in exchange rate. Singapore's annual inflation rate stood at 6.7% in November of 2022, unchanged from October 4 months, low reading but above market estimates of 6.45%. There were rises in cost of housing, accommodation, transport, clothing, and food, and also many more. So this is why the volatility of Singapore is high. Next, I will pass the presentation to Sophia.
Thank you, Daniel. So let's move on to what factors that lead Singaporean dollar currency drop. There will not be any significant changes to the value of the currency as a result of the epidemic induced by COVID-19, but the drop in the value of the currency may be attributed to the following three different factors before issues arising. The first factor is inflation. Inflation keeps track of how quickly price of goods and services for consumers go up. The lenders will charge interest, and when interest rates are low, more people borrow money and buy a lot of big things, which drive up prices. When central banks try to slow down the economy and inflation, this is what they do. The rate of inflation is now at a new high of 6.7%, and because of this, the cost of living has gone up for people who live in Singapore. Next, the second factor is government debt. Inflation is caused by government debt. If government debt grows, international investors may sell their bonds, and this will devalue the local currency. Singapore's banking sector accounts for most of this gross foreign commitments due to its prominence as an international financial center. And lastly, its economic performance. Political stability affects an economy, and because of that, international investment increase with political stability. Singapore has stable financial and their trade policies decrease currency value uncertainty. So due to its triple A sovereign credit rating, significant current account surplus and positive foreign currency reserve, will lead investors to consider Singapore is a safe haven. Why? Because Singapore is crisis proof. Next slide. Okay. This problem emerged as a consequence of the fact that all of these causes contribute to the currency depreciation. Because of the COVID-19 outbreak, there has been an increase in inflation, a rise in the total amount of debt owned by the government, and a decline in the efficiency with which the economy operates. So as a consequence of this, the value of the currency decreased, which result in the ensuing difficulties that are outlined below. So now let's look at the issue. Okay, the first issue is Singapore's dollar stock slides on disappointing growth outlook. Despite falling prices, the country expected a slowdown in economic growth next year. As Singapore forecasts 0.5% to 2.5% growth in 2023, decreased from 3.5% in 2022, the dollar fell by 0.4%. But despite a rising recession, also maybe expect the must to tighten monetary policy again in April 2023 to reduce core inflation pressures in the tight labor market. Next issue is economic downturn in Singapore seemed to be contracted by 6.5%. As local disease decreased, Singapore removed coronavirus-related restrictions, slowing economic contraction in the fourth quarter 2020. In third quarter, Singapore's GDP fell by 5.8%, and Southeast Asia trade and tourist powerhouse has suffered from virus-related restrictions, worldwide border closures, and a weak global economy. Singapore GDP is anticipated to shrink between 6% and 6.5% in 2020 before gaining between 4% and 6% in 2021. Lastly, Singapore downgrades 2020 economic growth forecast to between negative 0.5% and 1.5% on coronavirus impact. Due to the coronavirus pandemic, the Ministry of Trade and Industry (MTI) lowered its economic growth forecast to negative 0.5% to 1.5%, indicates a recession. MTI forecasts 0.5 to negative 2. 0.5 to 2.5% GDP growth in November 2020. The fourth quarter's 1% year-over-year gain beat the 0.8% prediction, and the third quarter is 0.7%. So that's all from us. Thank you.